63 banks are maybe on the brink of collapse. I'll give you the details in this video. Also, 6 insurance companies may owe you money back. All the details in this video. Let's jump right in. Thank you so much for hitting the like button for us. It really helps out our channel. Here we go. All right, we've already seen major US banks collapse and other banks around the world, including here within the last year or two. I think it was last year, 3 out of the 4 largest banks in the US ever collapse. Now you can see this headline: US banks on the brink of collapse. $517 billion losses threaten 63 banks. That is a pretty scary headline. Can let me know your thoughts on this. Take a listen to an excerpt of this article. The health of the U.S. banking system is a topic of constant scrutiny. Recent data from the federal FDIC Corporation paints a mixed picture. While they reported some profits, they're also reporting some losses, which is kind of like a tale of two stories. We'll skip past the profit part because banks are always reporting some profits, but the losses are what is interesting. However, unrealized losses remain a significant problem in the US banking system. Unrealized losses on the rise among US banks. Banks' unrealized losses have increased significantly, reaching $517 billion. That is a lot of money. This is enough to sink many, many, many banks. These losses stem primarily from their holdings in residential mortgage-backed securities. That should ring a bell for you. That is what caused the 2008, 2009, 2010 economic collapse for the United States. When interest rates rise, the value of these securities fall. While these losses are realized once the securities are sold, they can become a significant burden if banks need to raise cash. And remember, back in 2009, 2010, the whole banking system almost collapsed, and literally the Treasury had to bail out these banks because the whole system almost went down. This marks the 9th consecutive quarter of high unrealized losses. 9th consecutive quarter. If that's not ringing some alarm bells, something should. Coinciding with the Federal Reserve interest rate hikes that began in early 2022. Increased number of problem banks in the US. The FDIC also reported a rise in the number of banks on their problem bank list. These banks are at risk of insolvency due to a various financial weakness. However, the FDIC emphasizes that the number of problem banks remains within the historical range observed during non-crisis periods. Wow, trying to put lipstick on a pig there. Um, yeah. The federal agency assures that the U.S. banking system isn't in immediate danger. Well, did they think we were in immediate danger in 2009, 2010 when the whole system almost went down and they had to put trillions of dollars into these banks to prevent them from collapsing? However, it acknowledges ongoing challenges posed by inflation, volatile stock markets, and geopolitical tensions. These factors could impact banks' ability to lend, generate profits, and maintain sufficient liquidity. Additionally, specific loan portfolios, such as those for office properties and credit cards, require close monitoring due to potential deterioration. The FDIC and, Jerome Powell, the head of the Fed, will continue to supervise these issues along with funding pressures and shrinking profit margins. Because heaven forbid these banks actually, don't go out and do these risky things to the riskiest degree. and, prevent themselves from going bankrupt, going out of business, and literally doing the riskiest things that they can to, you know, not lose everything, lose their literal shirt. But it would almost be like, learning the figurative and literal lesson that they just should have learned not that many years ago. But alas, history repeats itself. And here we are yet again with mortgage backed security problems and 63 banks. We'll go back to the headline, 63 banks on the brink of collapse worth $517 billion. I mean, you guys can let me know your thoughts on this. And then we got the other problem here that is other quasi type of banks, insurance companies, which are very similar in type of things, type of organization, type structure. 6 insurance companies have been fined, ordered in Florida to pay back company. Liberty Mutual, one of the largest ones out there, who hasn't seen their commercials, ordered to pay back $4.7 million in refunds. Here's what happened. Florida insurance regulators have levied fines and ordered refunds on 6 different insurers, according to consent orders that were recently posted. The violations cited vary from failing to file scheduled paperwork on time to overcharging on auto policies. Liberty Mutual, according to one consent order, overcharged on approximately 46,053 auto policies. That's a lot. And ordered to pay $4.7 million in refunds. And it also makes you wonder if this was just in Florida, and this is what they caught them with. Is this happening in other states? And do other states need to look into this more closely? The company responded with the following statement. We applied a new rate program in Florida and filed it with the Office of Insurance Regulation, known as FLOIR. Under state regulations, carriers can immediately implement their actuary indicated rates and make adjustments after FLOIR review. Our rates were subsequently confirmed with some modifications, and FLOIR requested the refund on some premiums to impacted customers, which we are in the process of completing. Another auto insurer, Peerless Indemnity, is being told to offer to pay $76,000 in refunds. Fines were also issued for failing to file paperwork on time to Gateway, $3,000, Pi Casualty, $6,250, Pi Insurance, $3,000, and Pi Insurance again, $12,500. Insurance Insider said the consent orders send a clear message about how Florida's Office of Insurance Regulation plans to keep an eye on companies as the state tries to stabilize the insurance market. This comes as we're seeing double-digit increases here over the last year or so in insurance increases for auto insurance, home insurance, and almost every type of insurance. And remember, states require you to have auto insurance and home insurance if you have a loan on your home. And they make it illegal for you to drive without auto insurance. So they're basically forcing you to have this insurance, and these insurance premiums are skyrocketing. So let me know your thoughts here in the comments. I will keep you up to date here with everything going on in our country on a daily basis. If you haven't yet, thank you so much for liking these videos. Share them with anybody that needs to hear this information. And if you haven't yet, subscribe down below. Click the bell icon so you don't miss out on any new videos. It's completely free to do so. They come out at 8 p.m. Eastern Standard Time. Click here if you're a renter or you own a home. This video will give you some really good information that you need to know about. Thanks, and I will see you in the next video.